Hi, Andrew Bell here with you. May I start off this week with a thank you to so many people who do send in emails of thanks for the information that we provide in our e-newsletters. We have approximately 200,000 people on our database, primarily from Australia, but in locations also all over the world. And we're pleased to know that our 5 to 6 minute snippets of information and research is helping provide not only up-to-date information on the market, but a deeper understanding of all the factors that drive the real estate market. This fortnight, we're looking at real estate prices. Throughout Australia, there are about 8.8 million residential properties spread over 15,000 suburbs. And naturally, there are quite significant variations from one market to the next, driven not only by the national influences, but by state and local influences. There are numerous research groups that track real estate prices, but one of the better known is RP Data. Whilst they do monthly figures, they can vary quite a bit from one month to the next. And so the most reliable information is more the quarterly reports. The first quarter of 2014 reflected an average 3.5% increase in property values over the first quarter of the year throughout the entire country. But there were very large differences amongst the states. Melbourne posted the strongest gain at 5.4%, followed by Hobart at 4.7% and Sydney dropping down to 4.4%. Now, you might recall from my previous reports that over the past couple of years, Sydney has been posting the strongest price growth. But it's clear that that city is definitely losing momentum. Darwin came in at 2.8%, Canberra at 2%, and Brisbane at 1.5%. Interestingly, Perth has now been significantly affected by the slowdown in mining and recorded a fall of 0.6%. So you can see the significant differences from the best performing market being Melbourne with 5.4% gain, as opposed to Perth falling 0.6%. Without really examining these figures, you could easily think that buying into Melbourne was the best move, as it has posted the strongest price growth. But the danger is that if price rises have been occurring over a long period of time, that you could actually be buying in at the top of the market cycle. For example, the Sydney market, which has been the longest running price growth market in Australia over the past 2 years now, recorded price growth which now places 15.8% higher than their previous peaks. This is considerably higher than the next two highest markets, being Melbourne, which is just 4.7% higher than their previous peak, or say Perth and Canberra, which have risen 2.9% and 1.2% higher than their previous peaks respectively. The latest report says that Brisbane's performance is worthy of note. The reason I particularly point this out is that it is the closest market to the Gold Coast and therefore the closest capital city market that might give us some insight into the Gold Coast market. The report says that Brisbane remains at 5.2% below its previous peak and has one of the best rental yields of all capital cities. Whilst I mentioned that we don't look closely at monthly trends, it was interesting to note that Brisbane property values jumped 2.9% in the month of March alone. The report states that Brisbane is likely to be the market to watch, as Brisbane, compared to other capital cities, has recorded a much softer performance despite a lift in buyer numbers and strong yields. It's also interesting to note that looking at the broader housing market across price segments, it's the premium market that's remained the best performer. After recording a much more substantial correction during the GFC, dwelling values across the most expensive quarter of the entire market were up 7.2% over the past 6 months, whilst the lowest price quarter of the entire market saw values increase by 4.9%. There's a really interesting point to note for investors, and that is with property price growth, yields are actually in decline. And so any delay by investors into buying into the market will have an effect on your yields. Well, our budget was released this week, and it's far too early to really judge the impact that it's going to have moving forward. At the moment, the very vocal interest groups are all having their say, and of course that does muddy the waters. But with a little bit more time under our belt, we'll get a clearer picture. I think we all acknowledge that the current situation of government revenues being considerably less than government expenditure just simply can't continue. Well, the end of the financial year is almost upon us, and it is always a busy time given that there are significant tax implications, whether that be from capital gains tax or from negative gearing implications that come into play right now and of course the track strategies that need to be put in place for the years moving ahead. It's a very active time in the real estate market where for some it's very beneficial to sell and for many others beneficial to buy. We're finalising our mid-year sale, so if you are thinking of selling, let us know as soon as you can. But as an investor, we're particularly targeting properties that would be ideal. And of course, we will forward you our latest list of properties in the not too distant future. There will be more market updates in a fortnight's time, and we are moving progressively through the annual property report. And will very shortly be focusing on Queensland as a whole and the Gold Coast in particular. It's a great pleasure to be able to provide this information for you so that you are up to date with the latest perspective on real estate. That's it for this week. Best wishes for now.